Hello everyone, it's Friday, March 27, and today we will review the charts for the euro and the pound to identify potential market movements. As you can see, the market situation remains largely unchanged, with both the European currency and the British pound continuing to lose value against the US dollar. While the euro is relatively stable, the pound has been experiencing sharp price fluctuations, reflecting an ongoing battle between buyers and sellers. Yesterday's data did not have a significant impact on risky assets. However, US initial jobless claims came in line with analysts' expectations, rising to 210,000 for the week ending March 21. Meanwhile, recurring applications for US unemployment benefits fell, undershooting market estimates, which has allowed the greenback to strengthen. Nevertheless, the key focus remains on the situation in the Middle East, where the risk of a ground military operation has now approached nearly 100%. Market participants are pricing in the likelihood of a continued conflict, which may further strengthen the dollar. Additionally, Fed officials spoke yesterday, with Michel Barr indicating that there is currently no need to adjust monetary policy, although policymakers should monitor upcoming statistics closely. Many officials share this perspective. Even Stephen Mirren, who typically advocates for a dovish monetary policy, has reassessed his position. Previously, he expected 4 interest rate cuts, while now he anticipates only 2. However, the escalating conflict in the Middle East raises the possibility that the central bank could shift toward interest rate hikes. This was also a key point emphasized by ECB President Christine Lagarde yesterday. Now let's take a look at today's macroeconomic calendar, which is relatively light. In the first half of the day, traders should pay attention to UK retail sales, excluding fuel, which are estimated to have declined by 0.8% in February. This could add to the pressure on the British pound, which has been struggling since the start of the week. Later in the day, the focus will shift to US statistics. The University of Michigan is set to release its surveys on consumer sentiment, inflation expectations, and current conditions for March. Given the ongoing conflict in the Middle East and rising energy prices, we may see some changes in the readings. Thus, this report will be crucial for traders. A deterioration in consumer sentiment could weigh on the dollar by the end of the week, potentially allowing the euro and the pound sterling to enter a bullish correction. Furthermore, Fed officials Thomas Balkin and Mary Daly are scheduled to speak today. Their remarks will be of interest to market participants, although the overall stance of Fed policymakers appears clear. They advocate for a cautious approach before making any major informed decisions. Turning to technical analysis, the 1-hour EUR USD chart indicates that a rise followed by a false breakout at 1.1556 would trigger a sell signal, pushing the euro down to 15.19. A break and hold below this level could drag the pair down to 14.84 and open the path toward 14.48. At this level, I would recommend considering long positions on the rebound, targeting a move of 30-35 bips. Buy entries at 15.19 and 14.84 should be placed after a false breakout. The target of bulls would be 15.56. If the price breaks through and consolidates above this mark, driven by weak consumer sentiment and rising inflation expectations in the United States, the euro could climb to 15.88 and potentially extend gains to 16.28. At this level, it would be wise to consider short positions. On the rebound, anticipating an intraday correction of 30-35 pips. Sell entries at 15.88 and 15.56 would only be relevant after a false breakout. As for the British currency, it is currently trading around 33.39, positioned in the middle of a new sideways range where it may remain until the end of the day. A rise followed by a false breakout at 33.66 would present an opportunity to sell the pair, targeting a pullback to 33.39. If the price breaks above 33.66, it would be wise to hold off on short positions until the price reaches 33.94 on a false breakout or 34.24 on a rebound, aiming for a move of 25-30 pips. In the bearish scenario, a drop below 1.3339 would generate a sell signal, with sterling potentially sliding to 33.09. A break below this level could push the price down to 32.84 and may open the path to 1.3258. Long entries could be considered at 32.84 and 33.09 after a false breakout, while going long on a rebound would be appropriate at 32.58, expecting an intraday correction of 20-25 pips. Good luck to everyone. Have a great weekend.